If you're considering buying a home, one of the most important things and first steps is to talk to a mortgage lender to get a pre-approval. Pre-approval serves as many functions, but one, and most importantly, is it gives you a blueprint or an outline of what to expect in terms of loans that you may qualify for, what your potential monthly payments could be on certain houses, what the closing cost requirements would be, and down payment. Knowing all this information before you start shopping for houses is vital to the process. A pre-approval will also give your real estate agent the best idea and how to execute for searching for the right house for you. There are many different types of mortgage products available, especially in today's market. One is a conventional mortgage, which you hear about the most. It's the most common loan product, and it's backed by Fannie Mae and Freddie Mac in most cases. Usually, these loan products require 3 to 5% down minimum, but you can do more, and they're viewed as your most cookie cutter loan products. Another loan product that you can consider is an FHA loan. It's not a first-time home buyer loan, but is commonly used by many first-time home buyers. FHA is smaller down payment. You only have to do 3.5% as opposed to 5, or in some cases 20%. Their underwriting criteria is a little more relaxed, and they're more flexible with credit scores, income, credits from the seller, so on and so forth. You may want to consider inquiring about those two loan products first. Another loan product for veterans is a VA loan. A VA loan is an awesome loan product, and it requires no down payment and there's no mortgage insurance. If you have served in the military and you have eligibility, you may want to consider a VA loan. Another loan you may want to consider is a USDA loan. USDA is eligible in rural areas, so check with your mortgage lender to see if it's eligible, but it requires no money down. Great loan product to get in the house with no down payment. Getting pre-approved for a mortgage is rather quick and easy. There's no one correct list because everyone's finances are different, but generally speaking, you want to contact a mortgage lender and start giving them information that they require. This information is usually done with an online application or verbally with the loan officer over the phone. After that, they're going to send you a list of documents. The standard list would start something like this: driver's license, last 30 days of pay stubs, last 2 years of W-2s, and most recent 2 months of bank statements or any other type of asset information like a retirement account, pension, so on and so forth, to verify what kind of funds you have for a down payment and closing costs. There is a major difference between a pre-qualification and a pre-approval, and 10 times out of 10, I suggest you do a pre-approval. A pre-qualification is mainly verbal, so you and I meet in person at any given place or time, and you give me some information verbally, and I write that down on, let's say, a napkin. It's a little exaggerating, but that's really what a pre-qual is. It's not as strong as a pre-approval. A pre-approval is a verification that your credit was checked, you submitted documents, and those documents were reviewed. You have a much less chance of running into issues down the road doing a pre-approval as opposed to a pre-qual. How much should you budget for a down payment and closing costs? Well, that depends on what type of loan product we pre-approve you for. But a general rule of thumb is I would try to have at least 3 to 5% for the down payment and at least another 4 to 5% for closing costs. Every situation is different, so that may change, but inquire with us. What is mortgage insurance? There's a lot of conversation about this. Mortgage insurance is a monthly fee that you pay to the bank if you don't put 20% down or more. It all depends on what your credit score and your down payment is. It may vary greatly, but on average, mortgage insurance usually costs between $50 and $150 a month. If you're looking to get your credit score as high as possible before applying for a mortgage, you want to check your credit ahead of time. You're eligible as a consumer for one free actual credit pull per year at annualcreditreport.com. Some quick hacks and tips: make sure you have no late payments, never go late on anything. Credit utilization. For example, you have a credit card with a $1,000 limit. You want to keep that utilization 30% or lower. So for example, a $1,000 limit, $300 balance or less. If you overutilize your credit, The way the bureaus view that is you don't know how to budget properly. So you want to make sure that utilization is as low as possible. Lastly, you want to make sure you clean up any potential collection accounts. These could come back to bite you in underwriting when you apply for the mortgage. If you're a first-time home buyer and you're wondering if there's any first-time home buyer products, incentives, or grants, well, there are. Every state is different. There are usually grants at the state level, but there's also grants at the local county level sometimes. So you always want to check with your lender to see if they're aware of any state or county grants. Chances are, if you're a first-time home buyer and you fall within some criteria, you'll be able to get a grant. People will come to me and ask me, how long does the mortgage process take? Well, that could vary anywhere on average from 3 to 6 weeks usually. If there's delays outside of our control, it could be longer, and if there's other circumstances, it could be quicker. But on average, 3 to 6 weeks. This could be the most important part of information is what are the potential pitfalls when you're applying for a mortgage or looking to close on a house? Well, tell your loan officer everything. Make sure you make your mortgage payment or any payments on your credit report on time. Do not go late. Make sure that you don't get your credit checked again or open up any new lines of credit. And if you do switch employers or jobs, you want to make sure you run that past your loan officer as soon as possible.